Well, I thought it would be super fun today, having bought thousands of homes, to actually rate the country and hand out some awards for some of the very best and some of the worst markets. Because as a professional investor, I can get a lot more ROI and make a whole lot more money depending on where that market is. So today, I'm gonna read the country for you. I'm gonna hand out some awards on the best and the worst markets. All right, check it out. Today, I'm handing out the 2022 Housing Market Awards. We're gonna celebrate the best markets, maybe some of the worst markets, and it's gonna be an eye-opener because most people don't understand just how wildly different one market can behave from another one. You're about to learn a lot. Okay, the first award that we're gonna hand out is across the entire United States. Which market is the most affordable? As in, after you pay all your expenses, where do you get to have the most money left over? And the winner goes to Harlingen, Texas. Check this out, the median home value is $103,000. For just all intents and purposes, consider that the average home price is around $100,000, and yet the median income is $48,000. So literally a house costs double what the average person makes in a year. Following similar growth trends seen in most of South Texas, and nearly 1/4 of residents live below the poverty line. So this is probably the poorer part of the country, which is also why it's not attracting a lot of businesses, a lot of economic growth, and as a result, the prices of homes are really, really low. So definitely a great place to save money. I'm definitely not promoting this as maybe a place where you want to raise your family. The opposite award goes to the least affordable place to live, and that is, drumroll please, Miami, Florida. The median home value there is not $100,000, it's $610,000, and yet the median household income is $44,000. Check this out. Compared to Harlingen, it has a lower average household income for the area, but homes cost 6 times more. It has a high price to income ratio due in part to retirees and international money. Miami is experiencing rapid growth, however, as in a 3.2% growth in 2021 and 4.6% in 2022. Next, we're going to take a look at the fastest growing metro area, and that goes to Austin, Texas. The median home value, $381,000, and the average median household income is $78,000. There are 2 major Austin suburbs, Georgetown and Leander. They saw 10% growth in 1 year alone, and Austin's soaring growth has almost made it the #2 most inflated market. But then you have your fastest shrinking metropolitan area, and that award goes to San Francisco. The median home value is $1.2 million, and the median household income is $126,000 a year. Population of San Francisco decreased by 6.3% between July 2020 and July 2021. I want you to think about that. 6.3% of the population reduced. That means like more than 1 in 20 people left the area, and I wonder why. Once many jobs became remote, people left the Bay Area, they went to go look for cheaper cities, and I have to tell you, this is happening throughout all of California. In fact, last year, California and New York had the greatest exodus, each with around 300,000 people leaving their states. And meanwhile, where did they go? Well, 500,000 people were added between Texas and Florida alone. Now, we also know during and after the pandemic that the price of real estate soared. In fact, nationwide, it went up around 50%, but not equally, in some places more than others, which means that some markets, one market in particular, has to win the award for the most inflated market, and that award goes to Boise, Idaho. The current median home value is $495,000, with the median household income at $68,000. And recent studies show that Boise's home prices are 73% higher than they should be. That likely bodes for a correction in that area. I don't know if I was an investor, if I'd be super eager about buying a lot of real estate there. Boise tech jobs were already booming when remote work drew new residents in. You know, part of this is due to this really fascinating phenomenon called remote working. It became really popular during the pandemic, and people started realizing, wait a second, if I don't have to literally live in this geography so that I can commute to this building where I'm gonna work, then where would I wanna live? And you know what the stats are telling us? A lot of people went more rural. A lot of people moved from California, and we saw along the Rockies a lot of growth. Boise, Idaho taking on a lot of that. There's a lot of people that said, you know what? I'd rather live in Florida. I'd rather live in a warm weather down by the ocean. I'd rather live in Texas. Part of this is due in fact that companies now have developed a comfort zone around allowing people to work remotely. Frankly, they've figured it out. And if that's true, and if that's gonna stay true, then we're definitely gonna see some shifting trends in where people choose to live. So if Boise is our most inflated market, then what's the least inflated market? Well, that award goes to Baltimore, Maryland. The median home value currently $175,000, and the median household income $54,000. Baltimore home buyers pay a 2% premium, the lowest in the country, and low price inflation is due to Baltimore being hit very hard by the 2008 recession. So there you have it. I mean, take a look at how wildly different real estate can be as you move across the country. This really begs the question and then the answer. Kris, where do you invest? And now you know why. You know that out of 324 major markets, I'm only going to be investing in the top 5 markets. Why? Because those markets produce the highest ROI. I get the best growth, I get the best cash flow, I get the best tenants. You can get the best of everything when you take on that sophisticated approach. And the good news is, it's not just available to guys like me, it's actually available to you. One of the benefits of having transacted over $2 billion worth of real estate is I've made a lot of mistakes along the way. And not gonna lie, I feel like I have a huge unfair advantage, almost a little bit like a cheater, because I now know how to make the most money in real estate. And it turns out that buying real estate in your backyard is usually not the most profitable thing to do, as you can see from today's video. What is the most profitable is to specialize in the markets that make you the most money. And if you're interested in where I invest, where I make the most money, where I get these really high return on investments, why I can outperform the stock market 27-1, well, click a link below and learn about partnering with me. There's a link there that will tell you about where I invest, how I do it, my track record of my last several thousand homes, and how you could actually participate and actually be my partner. We could go out and literally buy real estate together. I'll do 100% of the work. We'll both be equal partners. But if you got money sitting in a 401k, an IRA, equity in a home, and you don't know what to do with it, but you know it's not going to be enough for retirement, well, I'm going to tell you right now, real estate outperforms your retirement plan on the low side, 27-1, on the high side, 100-1. And if you want to know how true that is, verified proof by numbers, click the link below and learn about partnering with me. Well, my friend, winter isn't coming. Winter is here. And that has a lot of people worried about what's going to happen in 2023. And I got to tell you, I got some strong feelings on how I'm reading the cycles, and it has me bullish. It has me participating very differently in the game of real estate than I did this last year. If you want to know what's changed, if you want to know what I think is going to happen in the market, click right here, watch this video. It's not winter. It's time to buy real estate.